The most important subject is the one they will never teach you in school. Most people assume there's a simple reason for this. They are mistaken. The debate over financial literacy is a battle between two ugly truths, a system that benefits from your ignorance, and a system too broken to fix it. Smart, well-meaning people disagree violently on which is worse. Where do you stand? By the end of this, you might not be so sure. The first argument is the one that feels true in your bones, especially when you're staring at a credit card bill. It claims the exclusion of financial education is a deliberate choice, a feature, not a bug. A financially sophisticated population is a threat to the current economic order. The entire structure of modern consumer capitalism runs on a steady supply of people who borrow money they can't afford for things they don't need. Think about it. The multi-trillion-dollar credit industry relies on you misunderstanding compound interest. Their profit is the delta between the minimum payment you make and the crippling interest that accrues. They don't sell loans. They sell monthly payments. They have mastered the art of making a crippling long-term liability feel like a manageable short-term convenience. A public educated on the time value of money would be a catastrophe for this model. People would save more and borrow less. They would calculate the total cost of a 30-year mortgage and perhaps rent longer to save a bigger down payment. They would see a 72-month car loan for what it is, financial handcuffs. They would question the logic of going into six-figure debt for a degree that might not increase their earning potential. A financially literate citizen is a less profitable consumer. They are harder to sell to, harder to manipulate with advertising, and harder to lock into cycles of debt. This creates a workforce that is less desperate, less compliant, and more likely to demand higher wages or start their own businesses. The system, in this view, has a powerful immune response. It actively rejects anything that might threaten the stability of the host. And a population that understands how money really works is a virus. This paints a dark picture of a calculated, deliberate conspiracy. A room full of shadowy figures, plotting to keep the average person running on a hamster wheel. It sounds convincing, especially late at night. But there is a problem. It gives the system too much credit for being smart. The counter-argument is less sinister, but perhaps more depressing. It suggests the absence of financial literacy is a simple case of bureaucratic failure and institutional inertia. Imagine you're a school superintendent. You are juggling demands from every direction. The state legislature mandates a new civics curriculum. A vocal group of parents insist their children must learn to code by 3rd grade. The federal government is tying your funding to standardized test scores in math and reading, forcing you to teach to the test. The teachers' union is already fighting you over class sizes and prep time. The school day has exactly 7 hours. Where precisely does Introduction to Index Funds fit? After history? Instead of art, do you cut physical education? Something has to give. And a subject that has no standardized test, no powerful lobbying group, and no historical precedent is always the first to go. And who would even teach it? Think of your high school math teacher. Was he a financial wizard? Or was he a guy who drove a 10-year-old sedan and worried about his own pension? The skills required to manage a classroom of teenagers are completely different from the skills required to analyze a balance sheet. To implement this properly, you would need to train and certify hundreds of thousands of new educators in a field most of them find intimidating themselves. The cost would be astronomical. The logistical hurdles are immense. It's easier for everyone involved to just ignore it. To quietly agree that this is a parent's responsibility, it's a classic case of passing the buck, institutionalized across 50 states. The system isn't a conspiracy. It's a traffic jam where everyone is honking but nobody can move. So we have two competing theories: malice or incompetence, a deliberate plot or a tragic accident. That seems plausible, a simple matter of choosing your preferred villain. And yet, the bureaucratic explanation has its own massive blind spot. It completely ignores who benefits from this accidental gap in our knowledge. When a system repeatedly fails in a way that consistently benefits one group, you have to start asking if it's really a failure at all. This is where the debate gets truly complicated, because even if a school district could solve the logistical problems, they would immediately run into a new one, an ideological war. What exactly is financial literacy? Is it the Dave Ramsey school of thought? Live on rice and beans, pay off all debt with fanatical intensity, and treat credit cards like they are radioactive? This is a philosophy built on discipline, sacrifice, and risk aversion. Now imagine teaching that in a low-income school. Are you giving students the tools for freedom? Or are you teaching them to accept a life of permanent austerity, to shrink their dreams to fit their budget? Are you immunizing them against debt, or are you conditioning them to never take the kind of calculated risks that build wealth? Then there's the other side, the Robert Kiyosaki, rich dad, poor dad philosophy. Use other people's money. Leverage debt to acquire cash-flowing assets. Think like the bank, not the customer. This is a philosophy of aggressive risk-taking and financial engineering. Now, imagine teaching that in an affluent suburban school. Are you empowering the next generation of entrepreneurs? Or are you training a new class of predatory speculators, encouraging teenagers to gamble with money they don't have? The line between a savvy investor and a reckless gambler is thin. Who decides which lesson is appropriate? The truth is, there is no politically neutral way to teach finance. Every lesson about money is a lesson about values. It's about risk, opportunity, and fairness. It's about the role of the individual versus the community. These are the most explosive topics in modern society. For a public school system, terrified of lawsuits and angry parent emails, the safest move is to say nothing at all. Abdicating responsibility becomes the only viable strategy to avoid a firestorm of controversy. The predictable result of this paralysis is a vacuum, a massive gaping hole in our collective education. And nature abhors a vacuum. So do corporations. Into this void steps a new set of teachers. Their lessons are everywhere. They are on your television, in your social media feed, and on billboards lining the highway. The credit card company sends you a pre-approved offer. That's a lesson. It teaches you that your signature is worth $10,000. The car dealership shows you how to afford a $50,000 truck for just $600 a month. That's a lesson. It teaches you to focus on the payment, not the price. The friendly face on TikTok explains how you can get rich quick on a new cryptocurrency, just before it collapses. This is the financial education most of us actually receive. It is a curriculum designed by marketing departments. Its goal is the creation of a profitable customer. We learn the rules of the game from the very people sitting on the other side of the table. They teach us about rewards, points to distract from 24% annual interest. They teach us about 0% financing to obscure the rapid depreciation of the asset we are buying. They teach us about the dream of home ownership to lock us into 30 years of payments. This education is pervasive, effective, and deeply biased. It works because it speaks to our desires and our insecurities. It offers simple solutions to complex problems. And it always involves signing on the dotted line. It all builds toward a single, uncomfortable core tension. The absence of financial literacy in schools is not a simple conspiracy hatched in a boardroom. And it is not a simple story of a broken bureaucracy. It is a systemic equilibrium. The bureaucratic incompetence and political cowardice of the education system creates a vacuum. That vacuum is then filled by profit-driven entities whose marketing serves as a de facto financial education. The outcome is a population that is perfectly primed for a lifetime of consumption and debt. It's a system that doesn't need a villain because the incentives are aligned so perfectly that it produces the desired result automatically. It functions like a conspiracy, even if no one is consciously conspiring. The machine runs on its own. So, the original question might be wrong. Perhaps we shouldn't be asking why they don't teach financial literacy in schools. Perhaps the real question is why we expect them to. Why we expect a state-funded institution, designed to create compliant citizens and employees, to teach us how to become financially independent from the very system it serves. It may not be a plot. It might just be a system doing exactly what it was designed to do, even if the designers are long gone. So where do you draw the line between incompetence and intent when the outcome is identical? The school bell can't save you now. You're out in the world, and your education about money has already begun. Who are your teachers, and what are they really selling you?